Let me grab my little paper. Actually, I'm just gonna grab my blanket. Well, hello everybody, and welcome to our week 7. You guys should give yourselves a pat on the back for being here the entire time. Oh, what is Jordan saying to me?
He doesn't have a cool virtual background.
Oh, sorry, Jordan. You can hover over your start video and pick the beach. Oh, there we go. Now it looks
Ryan,
like
why don't we go back to fire and ice?
Perfect. I feel warmer already.
Yeah, on fire, on fire. So we have a different type of program tonight where we are really fortunate and lucky to have 3 of our huge players in the area who do funding. And what we thought, because you need to know what all your funding sources are that you have available to you, because you need to kind of talk about that a little bit in your business plan. So we are lucky enough to have Brian Slaywin from Ben Franklin Technology Partners. We have Catherine Easterly from Bridgeway Capital, and she also has the Minority Accelerator Program. We have a lot of our students partaking in that. And we also have Jordan Fuller, who has a new title now at the Erie Regional Chamber and Growth Partnership, who is also doing Erie Secure. So I am going to have each of our panelists say a little bit about themselves. In your packet tonight, we actually have some information that each of our funders have given so that you have that information. This is going to be a Q&A session. I do have some kind of cool questions, not what's your favorite color or what's your favorite pizza topping, but some funding questions. But because we know you guys are not shy, feel free to also ask a question as well. Hi, Ken. I'm not sure where Letitia is, so hopefully she'll be jumping on soon. So at this time, so again, feel free to ask any questions or whatnot to our panelists. So right now, I would like to ask Brian Slaywin to kind of introduce himself, say a few words, and then we will move on to Catherine. Brian?
Sure, Kathy. Thanks for the intro and thanks for the opportunity. And let me just say before I talk about myself, how impressive it is that there's a half dozen of you or so that are willing to give up a couple of hours of your evening each week, all of the studying and everything that else goes on in between classes. I'm always excited to be around entrepreneurs, people who are looking at what does the future hold. So thanks for inviting us in today. The Ben Franklin Technology Partners is an early stage seed investor. The company has been around for nearly 40 years, and we invest in 2 kinds of companies, those that have a technology focus and those that have a manufacturing focus. And so our mission rather, is we invest in innovation. So if you're doing something new, if you're doing something intriguing, if you're doing something that improves a product or a process or invents a whole new market, we're very intrigued and always happy to talk. The one promise that I make is I don't care who you are, I will always make time to schedule a 30-minute discussion to see either how Ben Franklin can be helpful or how some of our partners like Catherine at Bridgeway Capital and so many others in the community. So it's a real pleasure to be here, and thanks for the opportunity.
Thank you very much, Brian. Catherine, the floor is yours.
Thank you, Kathy, for the invitation and also just this platform. I think it's always necessary just to have these conversations. My name is Catherine Easterling. I am the director of the Erie office at Bridgeway Capital. For those of you that don't know about Bridgeway, we are a CDFI, which is a community development financial institution. So we really focus on serving underserved populations and segments of small businesses that don't typically receive funding or aren't able to get funding at a certain point in their venture. And not just funding, but we also provide support and resources as well. Accounting, bookkeeping, marketing, things like that. We help with that as well. So we focus, we've been around since the early 90s, and then we have 3 offices on Western Pennsylvania. So Erie, Pittsburgh, and then Uniontown. We do some funding outside of the state and some of our neighboring states in West Virginia as well. And so our big thing is just really providing access to capital and kind of being that bridge for you to either be bankable or, once you're ready to be bankable. But we don't look at, funding from a traditional bank sense. We kind of like to underwrite, as I say, is the full picture. So we want to hear the story. We want to understand, if you're doing a deal or a market in an underserved population, what would that mean for the community? So we're really big on, providing financing to community aspects. We have focuses in housing, into food insecure populations, as well as some other key industries as well. So I'm very excited to talk to you guys and answer your questions. If you guys have anything, Kathy does have my contact information, and I'm just happy to be a part of this panel.
Thank you so much, Catherine. Jordan, the floor is yours.
Hey guys, I'm Jordan Fuller. I'm the manager of startups and entrepreneurship at the Chamber, heading up their new initiatives and surrounding those areas. But my main responsibility falls as the director and portfolio manager for the Chamber's Accelerator Program. We're a typical business accelerator program. We invest in a cohort of companies every year, put together a curriculum and facilitate introductions within the Chamber network as well as outside of it. That's the short version of what I do.
Great. Thank you very much, Jordan. So now we're going to get into our Q&A. Please remind me at the end. I have to remind you because you do have homework for this week. Anticipation for our exciting grand finale class next week. So someone has to remind me. So I'm going to ask question number 1 to Brian, then question 2 would be to Catherine, question 3 to Jordan. And then if anyone has any questions, including you, Ken and Letitia, please just pipe in with your questions. So because we are a business plan boot camp, our first question on the hot seat for Brian is, what do potential funders look for in a business plan?
So great question, and I've got a request. I think each of us probably have little wiggles and waggles on each of the questions. So my request would be, if you don't mind, all of us getting a chance to ask or answer some of these questions, because I know that Catherine and Jordan certainly have a different angle or a different take on some of these. So
Absolutely.
Doesn't upset the apple cart. All right, so good news or bad news? I'm not sure which. Ben Franklin doesn't use business plans as a way to evaluate companies. We have a variety of other forms, and as Brad will tell you, there's lots of them. There's lots of writing, and there's a whole lot of information exchange, but we really do things in a very different way. When we look at a plan, we're looking at a whole variety of elements, from who's your customer, what's the makeup of the team, what problem are you trying to solve, what market are you in. I see there's a question about financials here in just a second. I've got a different thought about financials, which we can address in a bit. So we really don't use business plans. We use other documents that are proprietary to us that tell us a lot about the company, the entrepreneur, and the market they're going after.
Thank you, Brian. Catherine?
So for us, we do use business plans for startup businesses. What we are starting to look into, because one, business plans can be an arduous task, and you may, have a very well executed business plan, but it doesn't really translate into real world, running a business every day. So we're actually looking at how business plans, one, create barriers to some of our applicants, and looking at that from a holistic standpoint. Right now, we look at them, but it's not all of everything, I guess, and kind of how Brian looks at things. We look more into the projections and some of the financials, but what we really want to hear is just there's a solid foundation, there's a plan that's in place. But again, like you said, you can have a great business plan writer, but how it's really implemented in everyday life is really the bigger thing. We want to see that kind of implementation process, and the what's next. If this doesn't happen, what's going to happen after that? So we do use them, but it's a part of the plan, but it's not the whole thing.
Thank you, Catherine. Jordan?
Similar to Brian, we don't look at business plans. We'll accept them as supporting documents for when we go through it, but we have a pretty simple, it's 30, 40 questions of application process, and then we go through a couple of interview rounds and an internal panel for selection on investments. So we don't necessarily ask for the business plan, but I'll never turn one down as how we approach it.
Excellent, thank you. Any questions? All right.
Yeah,
Yes.
So a quick suggestion, Catherine, and I know that Jordan uses this model as well. We ask our companies to create what we call a deal room or a documents room, where they can give us access to everything we need, right? Business plan, executive summary, financials, contract, everything, legal agreements, the whole shoot match. They provide us a link to that, and we can go in, sorry, my phone's ringing. We can go in at any time and look at whatever we need to look at. So I'd encourage everyone to begin creating a deal room or a shareable folder, like a Google Drive type folder, where you put all your stuff, and then, I'm sorry, my phone's really ringing. And then you put all your stuff in there, and you give us access, and it makes it much easier on you and much easier for them.
Yeah, I typically gather them or request them, but if you can have something already built and just send a link.
Great idea, thank you. Questions from the audience? All right, question number 2, hot seat goes to Catherine first. It is it okay if my financials are projections and guesstimates? And what are some preferred ratios that you would recommend that we include?
Awesome. So guesstimates is no. we would like to have you very realistic as possible projections. What we do with a lot of our projections is that we work with a lot of our consultants, and if projections aren't already completed, what we do is reach out to our SBDC or internal clients or consultants that we have to refer them to get those completed. So we look for at least 3 years worth of projections. So a guesstimate is, although it may be accurate to them from the financial standpoint, we would love to have, true projections, industry projections, regional projections, because a startup restaurant in Erie, Pennsylvania is going to be much different than a startup restaurant in Beverly Hills. So, looking from a regional perspective is very important too. And so just to have those, professionally done is something that we always have a request for. And our underwriting team does that too, because what they do is they look at those projections and then they stress test those projections. So they want to make sure that, if you know, God forbid, COVID happens and we're at, you know, 20% occupancy or something like that, we want to make sure that, you know, that you can still be able to repay it, given, you know, the worst case scenario, which has been all of 2020. So that's kind of how we look at it. But a guesstimate on from our standpoint is not necessary. We do look for, you know, projections.
Thank you, Catherine. Jordan?
So of the three of us that are on here, I'm probably the least stingy when it comes to this kind of stuff. Brian's probably going to touch on it in a bit, but my philosophy came from a discussion we had in undergrad, when I was an undergrad, looking for the story and what that tells with the financials. A young company is not going to be able to have those hard and fast numbers or anything. We just want to see how you're thinking about it and how it relates to your business. That's how I'm thinking about it.
And Jordan, you keep cutting in and out.
Oh, okay.
I think that's better.
Okay.
Sorry.
Sorry.
That's okay.
So if it's okay, I'm going to leverage off of what Jordan just said and borrow some stuff from Catherine as well. So here's the thing about financials. We'd like you to make estimated, intelligent guesses on things you don't know are about to happen. But it has to be realistic, right? It's unrealistic for you to think, well, we're going to sell 1 million of these in the first month. Is that realistic, or do you have a plan? So what we know is basically two truths. One is, no matter what your financials do or say or look like, they're wrong. We know they're wrong. We just don't know if they're wrong high. We just don't know if they're wrong high or if they're wrong low. So what financials really tell an investor is the way you think about and plan your business. It's a storytelling tool. It's not a financial tool as a pro forma. Now, historically, as you operate your business, you're going to have monthly financials that you can then use to compare against your projections and why were you high or low, right? You're going to be able to gain more data and more intelligence about your numbers as you go forward. That's the value of understanding financials, is the story that you're creating, how you're executing, and how close you can be to accurate as you move forward month to month. So don't worry that your numbers look weird, because they all look weird, but it's about that story and how you're going to execute as you go forward.
Thank you. Questions from anybody?
Yeah, I have a question. So when you're all evaluating tech startups and you're looking at these financial plans and projections, what operating expenses do you see tech startups leave out that they should be accounting for?
Oh, good question.
And it wasn't directed towards anyone particular. Yeah.
Yeah, so if you are working with an investor like Ben Franklin, we will work with you to say, well, what about this and what about that? I'd like to say it's always the same, but it's always different. Some companies put way too much emphasis on, I've got to hire another engineer and another engineer because my product just isn't perfect yet. Well, is it workable? Can you actually sell it now? Go do that. Go sell. Then we can hire some engineers. So it's usually how they're thinking about their business where they omit or they overemphasize a particular thing, and there's no, at least in my experience, there's really no consistency.
And that lets you shape the relationship and planning moving forward. It's just get us to a starting point and then we can help you move forward.
Yeah. A good investor, and you've got a question down here, what kind of investor should you look for? A good investor is like the three of us here. Someone who will take your stuff and actually work with you through the process. It's not like I show up and, you know, yes or no. That's not the way a good investor works. A good investor wants you to succeed, wants you to build a business. And so if something doesn't make sense, my responsibility is to ask you about it and then work with you to understand how you're thinking about it and hopefully share a little knowledge along the way.
Thank you. Any other questions? The Letitia, Ken? No? Okay. Next question is to Jordan. How long a time horizon do you funders have for the investments? So how long do you usually scale out the investment to a client? Hot seat.
We invest once a year, if that's what you mean, and we make our payments in lump sum.
And what? I'm sorry, the last part.
You make our payments in lump sum. The founder gets it all.
Okay.
It's not based on a personal contract.
And then how long does it usually take? What are your terms for payback? Is it 6 months? Is it a year? Does it depend on the amount borrowed or lent?
Our investments typically mature at 18 months.
Okay.
But then we have never triggered on a mature. We've only ever converted based on triggering factors.
Okay. Thank you. Brian, question to you.
Yeah, I'm gonna leverage off of what Jordan was talking about and put a little clarity on one particular item. So there's a variety of investment vehicles, right? From a straight loan to something called a convertible note, which starts off as a debt instrument, but can convert to equity. And then there's pure equity. And Ben Franklin can do all of those and several others. Typically, an investor who is looking at equity is looking to get a multiple of return. So if I put in $1, I want between 3 to 5 or more my dollars back within 3 to 5 years. That's the typical time horizon. But you have to be working on a business that's exitable or can actually do that, right? Typically a restaurant or a services business or some other kinds of business that really can't multiply, it's going to be difficult for a venture investor, an equity investor, to invest simply because there isn't going to be that exit event. So for those kinds of companies, the best opportunity are debt vehicles, like at Bridgeway and like at banks and other folks like that, where you're going to build a business and you're going to pay them back month to month or quarterly, however that works, until you've paid off all of the interest and then paid off all of the principal over time. And I think I won't speak for Catherine. I'm sure she has different windows and different time horizons. So equity investors, typically a 3 to 5 year exit with a 3 to 5 multiple on the investment. And on debt, we have various terms that extend out to 10 years at various interest rates. So that's kind of the two different flavors. And what Jordan was talking about was a convertible vehicle. It's called a convertible note or convertible debt instrument, that money goes in, you've got a certain number of months in which you can use it for free. And then you either have to convert to equity because of some event, like you've raised a lot of money from the outside, or you've reached a certain valuation of your company, it automatically triggers into equity, or you then start having to pay it back.
Great, thank you. Catherine, to you, please.
Yeah, so for ours, we are, traditional financing, as Brian said, so we are debt financiers. And so our terms, so it really depends. So for like our construction loans per se, right? So there's going to be multiple draws, multiple streams of us giving funds out. So say there's a construction loan and that construction site is not going to be completed for 12 months, but we provide financing over a period of time, over, say that we're going to do in thirds. So 30% will pay out 60%, and then there'll be another full payout as well. So that can be structured in that ways where there's actual draws. But typically, our loans, we have term loans that can be kind of, we tried to be as flexible as possible and also as creative as possible with our financing. So if a term loan with a balloon payment may be something that may be suitable for them, where they're just paying low payments now until they generated enough cash flow to be able to pay off a larger lump sum payment at a later time frame. That is, but we have, like I said, we have construction loans all the way up to commercial real estate vehicles. We try to be as creative as possible, and so we've done a lot of different things. Not taken second position where we're not the first lien holder, so that other banks can come in too, so that we can make deals happen as well. So we are. There's terms from 5 years to 20-year amortizations, and then those draw periods, depending on what type of loan you're looking at, can vary as well.
Great, thank you so much, Catherine. Any questions from anybody on that question? All right, back to the hot seat to Brian with question number 4. How big of an investment do you typically make? Maybe low-end investment into like the highest end, as far as what you would give out to a client?
Sure. So the answer really is, it depends, which I know isn't an answer. To give you a real answer, we can invest anywhere from about $10,000 all the way up to multiple investments that total up to about $500,000 over 3 or so tranches. But how you're using the money, what you're doing, going to do to minimize risk and maximize return. I mean, so many factors go into what a round actually consists of, or how many dollars it is. It's difficult to answer that. But for Ben Franklin, as little as 10 and as much as $500,000 over 3 or 4 or 2 or 3 tranches.
Okay, thank you. Catherine.
So our minimum amount is $5,000, and that's part of one of our SBA products. And then the maximum amount is, we've done $1 million deals too. So I don't like to say that there's maximum amount because depending on the deal and depending on how we want to structure it, I'm sure there is a maximum, and I'm sure our CEO would probably be like, there's a cap somewhere. But yeah, we've done we've done deals somewhere in between that $5 and $1 million range.
Thank you. Jordan.
So ours is it's interesting. So we've done deals of 25,000 and we've done deals of 100,000, but it depends on what the company needs and the terms we're able to agree upon. It really is a case by case scenario.
Okay. Thank you. Questions? All right. Catherine, this one is to you. Ooh, I like this question a lot. What do funders want in a CEO? When you are looking at a client and you're looking to see if you're going to fund them or not, what do you actually look for in a CEO of that company?
So I think the biggest thing is commitment, right? We will see, the serial entrepreneur who kind of has a hand in everything and is really not committed to the specified deal that they have. I think that's a big one. It's just committed to the business that they're in, and commitment can be fleshed out several ways. They've kind of done their due diligence. Someone that has is coming to you with all their ducks in the water. That's kind of like the optimal lender. Someone that I know what I want. I know how to get there, or know I need to ask questions to get there. And really just committed to the business that they're running. So I think that's just a big thing that we look into, is just, how committed, how deep are you into this?
That's a great answer. Thank you. Jordan.
Less so of the CEO, more of the founding team is what my team's interested in. CEO, obviously we want someone that's coachable, we want someone that loves the business, knows the business, etc. But if there's not a team surrounding them that also displays those same qualities, or there's not a plan to find those people, that's what we're looking for.
Great, thank you. Brian?
Yeah, I completely agree with everything Catherine and Jordan said, and really only have one more thing to add, and that's integrity. So that above all else, we're working and investing in people. And if bad things happen, what's the saying? Bad news doesn't get better with time. So things happen. I'm your advocate. I'm on your side. Let's work together to figure things out. Don't fluff your numbers in the beginning, and don't sugarcoat things as we're proceeding. So everything that Catherine and Jordan said, and then even helping integrity goes a long way.
And I'll build up with that. That goes both for good things and bad things. But we want to celebrate your wins. We want to help you through your down. Just talk to us. Communication is one thing that we do.
Okay. Thank you. All right. Our next question goes to Jordan, right? I think that's where we're at. Yes. Jordan, do I have to tell funders if I'm also going to other funding sources?
Depends on the agreements you have with them.
Okay.
The answer should be it's a win. You should be wanting to communicate with that with people.
Right.
Brian and I have gone in on a couple of deals with each other, and we ran into this recently where sent him an email, said, hey, did you know so-and-so was doing this? And he said, no, but I'm talking to them on this week. We're going to have a chat about that. I guess the technical answer is it depends on the agreement, but talk to people.
Yeah, there's always. I'm not a big fan of I'm hiding stuff and whatever. It's just unseemly. I want to know if you're talking with another investor, because that makes you more investable. I want to be able to be helpful if you're trying to get that other investor to come into the round, and I'm a big fan of yours if I am. And yeah, there are some agreements that you're not allowed to tell other investors you're talking to people. Boy, that tells you a whole lot about the investor, and I'd really be cautious if you're getting in a relationship with someone that makes you hide stuff. That's not a comfortable relationship, and I'd encourage people to sort of steer clear of that.
Okay. Catherine, thoughts on that?
So I guess there's two ways of thinking about it. So you have a great idea, you go to a lending institution, and you want to make sure that idea stays with you. So you're being very discreet about who you're talking with and why you're talking to them, and that I completely understand. From Bridgeway standpoint, the more the merrier. So we're the risk takers. We're the ones that want to make sure that however we can be a part of this deal, let's bring all parties together and seeing how we can do this, because what someone may not be able to do at PNC by themselves, but if Bridgeway comes in and, like I said, takes that second position and then says, hey, well, we'll finance what you can't, that's a win for the client. So I think that communicating that is and getting out of this mindset that it's a I don't want to tell them what else I'm doing. I don't want to show my hand, but in reality, if you're showing your hand, you may be able to bring more people to the table and be able to have better or favorable rates for you, because that you've discussed this with other people. And as Brian said, that shows your commitment. That shows that I'm going and I'm trying to seek out and understand and find the information that's going to be best suitable for my situation at the time. So I always say the more the merrier. And anytime that I can bring in any of my partners, funding partners in, I'm 100% here for it.
Thank you. Go ahead.
It goes back to integrity on that conversation. It shows a lot about the founder if they're willing to come and talk to you. Thinking about that. Get your advice on it. Also, early monies, it carries a lot of weight with further money. We're able to write or speak to great letters or conversations of recommendation. Let us be your champions. We can do that tremendously well, and we can tell the story from the very beginning. You can't ask for that kind of stuff. Better than early.
So follow-up question to that would be, if they are telling you, or maybe they are you as funders running the risk of having a client borrow money when their financials are showing that they're never going to be able to pay back what they borrowed from all of these lending sources? Is that ever a concern, or is that part of what you do as far as counseling them on, oh my gosh, what are you doing? Just out to the group.
I guess I'd say if the financials show that and it's evident, those later funders probably won't take the deal anyways.
Okay.
And then also, just have the conversation. Just have the conversation.
Okay.
Yeah, if a company is trying to raise $250,000 and they're coming to me and we're talking about $100,000, I'm gonna ask the question, where's the other money? Where's it coming from? So that sort of requires you to be honest about, oh, I'm talking to A, B, C, and D, and here's where I'm at in that process. Again, it goes back to the integrity piece. Just tell me what's going on. We can work through it. We can figure out a way around it. But don't shade stuff, because eventually it'll come out. Something. It always comes out eventually. So just be upfront. Tell people what you're trying to do. Tell them who you're talking with and how you're looking for help, and things typically will work out.
Thank you. All right.
Yeah.
Oh, I'm sorry. Go ahead, Catherine.
No, I was just gonna say I completely agree with that. We've had clients that have come to us and have had you went to the gamut of I don't like to say predatory lending, but other lending sources, and then have come to us and looking for more money. But when you really, like Jordan said, when you really kind of look at the financials of things, sometimes there's things you can do, sometimes there's things that you can't do. But that integrity part of it is just being open and honest about what you've done and where you're currently at with everything is just the biggest thing for all of us, I believe.
Great, thank you. Any questions? Brad?
So all of you have done and are from entities that have done funding for a long period of time. And so your historical wealth of knowledge, I think, offers an opportunity here for the audience that I thought I'd ask. What are some of the biggest pitfalls you've observed when courting startups to finance them? What are some of the pitfalls or impediments that you see more consistently than others that might be useful for the group to hear about so they're more successful in pursuing funding?
I got a few pet peeves. I'm not sure if they fall into the realm of consistent issues, but respond to communication. Like, I get it. You're not sitting at your email waiting for me to send you an email and then you're going to respond 7 minutes later. But within a couple of days, I think that's reasonable. And then make sure you read the whole email and answer the whole question. There might be 2 or 3 things in there, right? So attention to detail and consideration that we're trying to be helpful to you. I think that's probably one of the things that I look for, and very, very early in a relationship with a company is how are they being, because that will be a reflection of how they will be. And so we only want to work with really cool people doing really great things who are going to really, as Catherine said, be all in. And those early signals, we look for those a lot.
Great. Jordan or Catherine? Anything to add?
Focus. I think the focus, that's a big thing. A lot of times when you see, especially in startup
Oh,
One on, yes,
Catherine, you muted yourself.
I get so demonstrative that I use my hands and I muted myself.
It was flowing, but we couldn't hear anything.
So I was saying that the focus, I think that being focused at, the task at hand and, that responsiveness as, Brian said is really key. Is that, a lot of times, especially kind of through our lending process, you'll see that, underwriting may say have a question and I may reach out to a client and, how quickly you get back to me is how quickly a deal can get done, how quickly we can be moved through, to closing conditions and things like that. So I think that's really big to me. It's just the responsiveness. I don't expect that, like Brian said, that 7-minute response time frame, but something, in a reasonable time frame to know that you're focused and committed to what we're doing.
Well, Brad expects a 7-minute response, so I'm glad you guys are a little longer. Jordan, anything else to add?
nope. They hit on my biggest annoyances. So I'm gonna go ahead and bow out on that one.
All right. Anyone have a question? All right. So now we were on question number 8, and that goes to Brian. And Brian, you kind of answered this, but in case you wanted to add something additional, what should everybody here look for in a funder?
That's a great question. So there are how do I say this in a being recorded. There are people who are investors who are jerks, right? Just pure and simple. They're rude. They think because they can invest in you that they're God and King and everybody. I mean, there's jerks. So avoid the jerks. Even if it looks like they have money, it'll be you're going to be crawling through the desert. And so just avoid the jerks. B, find those investors who have some experience in the problem you're trying to solve. So there's something called smart money. Smart money means, you're going to get money, but you're going to get the other stuff like industry experience or connections to the next level of customer or mentorship. The things that Ben Franklin provides: capital, mentorship, and connections to customers, as well as follow-on capital and talent. So you're looking, this isn't about you hoping the investor likes you. You need to also like the investor. So look for those things that you need, and capital can be one of them, of course, obviously, and avoid the jerks. And when someone's being a jerk, just avoid them. So that's my answer.
Thank you. Catherine.
I am stealing that, Brian. Avoid the jerks is going to be like number one. I love it. That should be a t-shirt. Like in every aspect in life, avoid the jerks is always something you should do. But that's definitely the big thing. You have to find. It's kind of like finding a therapist. Like you have to make sure they're a good fit, but also that they're going to be a good fit for you too. Like it's a mutually agreed upon thing. And so, and it's a dance, and it is, it's a kind of an uncomfortable thing because you're asking for something. You're asking for them to give you something, to invest in your dream and to your baby. But it also has to be something that you're getting back, and not just financial. It has to be support. It has to be industry experience. It has to be, something that you feel like that's going to be necessary in order to move forward. So that's a big thing, is that when you're looking for funders, make sure that it's just not about the money, but it's about other things and support and resources too, and connections. I can't stress that enough, is that if I don't know about it, I probably can go through and see if I can figure out how, who do I know that knows that? And so to make sure that you have a funder that is connected is definitely a big thing.
Great, thank you. Jordan?
Yeah, the interview process is not just the interview of the investor picking the company. It is the company picking the investor, and treat it as such. The dollars, it's definitely an important, it's probably the driver for the conversation, but everything else that comes with it is at least as important, if not more. So go into each conversation with investors with that in mind, and you'll be okay. And avoid the jerks.
And we're just, so really well said. I just want to add one thing, because what Jordan said sprung this in my brain. There's plenty of money. Good ideas and teams who can execute will always find money, always. You've got to make sure that it is a two-way street, right? If you saw this person at room 33, would you be excited to go up to them and say, hey, or would you avoid them? Avoid the jerks, look for things more than money, and you'll be just fine.
I was on a call this afternoon with a counterpart at another accelerator program. They said that they didn't want to invest in anyone that they weren't willing to be friends with. And if both parties look at the deal in that way, it'll work out. Doesn't matter.
And avoid the jerks.
Avoid the jerks.
So just a follow-up question to what Catherine had kind of mentioned, jogged something. So for all three of you, you really are not lending money unless you actually give them support and kind of go on the journey with them. It's not like a bank where it's see ya, interest payments. You are actually offering, more than that, correct, for each of your programs?
Yes.
Ish? Okay.
Yeah, no,
Yep.
you're spot on.
That's the way we like it.
Excellent. That's awesome, that Erie has that available to everybody. All right, next question. Anyone have questions? Brad, you were kind of looking at me. Do you have a question?
Done. No, I have one for at the end.
Okay, one for the end. Just make sure you remember because I won't. All right, this one goes to Catherine. Catherine, if I raise funding from friends and family, do they have to be accredited investors?
Depends. So do they have a percentage of the company? So if they're just giving funds to give funds, then and they're accredited investors. So if they have majority ownership, then yes, we would need to pull financials for everybody that it has, majority ownership in there. Anybody less than 20%, we typically don't, have them, sign on to loans or anything like that. We need to know them and understand them. But as far as, will they be liable for anything that the business does on our, well, I can't say liable, I'm gonna say it like that. But 20% or less, we don't really look to them. We just need to know them. 20% or more, we need to know financials for everybody, and pull credit, things like that.
Thank you. Jordan.
Hey, Catherine hit on it. Yeah, it
You're the same?
depends how early the money is and how much it is. I'd love to talk to every previous funder of a company if I'm considering one for a deal, but that's not always a possibility. So.
Okay.
You mind if I dig into this one? Because this is
You
a really...
certainly can. I was just still writing, Brian. You may go ahead.
This is a really interesting area of the law. So full disclosure, I'm not a lawyer. This is not legal advice. Please don't tell me that you heard it from me on a recording and that's what he said. Right? Okay, just so that's clear. I'm giving you general guidance about what to think about. All right. So friends and family, there's an SEC requirement that if you are not going to meet the accredited investor test, and we won't go into what that is, that you must have an existing and prior relationship. Second, if you are going to sell securities, you either need to file with the SEC or claim an exemption under Reg D called the Rule 506. Again, I'm not going to get into the details of that. What this essentially says is these are not accredited investors, and I am not selling a security to them. Mostly friends and family should invest as debt so that there are terms to pay back. And you can then convert in later rounds, again, details. The way to avoid all of this is make sure you've got a great attorney who has done this a few million times and really understands the rules around raising capital. Here's where you're going to run into trouble. Somebody gives you money and you accept money from somebody. And a year or 2 or 3 or 5 down the road, things turn sideways. And they run to the SEC, they run to their lawyer, and they report to the SEC that your company accepted investment as a security from a non-accredited investor. That's when problems start. So there's not like the SEC police looking for everyone, lending money to everybody. That's not happening. It's when things start going sideways. So get a good attorney, make sure you understand what you are selling. Is it debt? Is it free lunch every week? Is it a security? And you'll steer clear. But generally, the general answer is friends and family. If you have a pre-existing relationship, if you hold it as debt, you're generally going to be okay.
And that goes into anything for future. Have an attorney review.
Exactly.
Definitely get an attorney.
Diana,
If it's a gift from a friend or family member, that's not considered an investment?
Tell me what a gift from a friend or family member means.
I mean, like,
If you open a card on your birthday and it's got some cash in it, that's a personal gift. That's not an investment in your business.
right,
Yeah.
but say an uncle is like, your mom told me you're starting a business, I want to gift you $1,000 towards it. How do
And
you
what does-
proceed forward?
What does your uncle want for that?
But I'm saying if he doesn't want anything,
He's just giving you $1,000?
yeah.
Can I give you my phone number?
That was hypothetical, my uncles don't really have any money.
So that's
I mean, that doesn't sound like an investment or debt.
Right, that's what I'm saying, it wouldn't
That would
really
be
be an investment. I have another question.
it doesn't sound like an investment, but in 2
I mean, it is.
when your business goes well, you're probably going to get a phone call from your uncle.
Oh,
You won't
hopefully
have-
he's
you
fast by
probably won't
then.
have any refunds. You're probably going
Sorry,
to.
I have a very crude sense of humor. I have another question. Go ahead.
Well, let me just clarify something. I mistakenly did a friend and family round several startups ago. And we did all of the paperwork, everything, right? It was all legal. I had all the lawyers. But the mistake that I made was that there's my aunt sitting across the table from me at every Easter and every Thanksgiving and every Christmas and every New Year's and everything, right? And guess what my aunt always wanted to talk about? How's the business going and when do I get my money back? So you need to prepare your relatives and friends for that conversation. And it usually sounds like, I appreciate your willingness to give me this money to help me with my business. You do know that you may never see this again. Like, you might as well light it on fire and throw it outside for as good as this money may do you in the future. If you have that real and honest conversation with someone and have it continuously, you're better off doing it that way. And of course, you're going to send them an email every couple of months that said, hey, here's what's going on, or hey, here's what's going on. But make sure you have the real conversation that says, I appreciate this. Here's the rules under which I'll accept it. And those aren't just legal rules. Those are rules of a relationship that you have with a friend or a family member.
Right.
Super important. I mean, I cannot stress how important that one is.
So I have another question. In my personal life, my husband and I do not like to carry debt. If we can't pay for it outright, we don't do it. In opening a business, if an entrepreneur has the financials to fund their startup, is it wise to invest their personal money into their startup, or is the better route to borrow?
Well, can you get smart money, or are you just getting money?
Good response. It's just
Well, no, I
money.
mean, it might be a flip response, but the response is money is money. Green is green. It all spends. What else do you need? Can you run this thing to success on your own? And you feel like you've got the emergency fund and the rainy day fund and your 401k's fully paid for and, you know, whatever, right? Do you feel like your financial future is secure, that you can afford to take this risk with your own capital? It's always better to do it with your own money or your customers' money, right? I tell all of our startups, the best investor is a paying customer. So that's always the right way to go. But do you feel like you have the financial footing? Can you breathe at night? Can you sleep knowing that your financial future is on the line? Can you get money from people who will give you more than just money? And so many different questions that you really need to think through. There isn't a yes or no answer about my money, their money. So anyway, that's the answer that I would give. And again, happy to talk it through, but it's not just about money.
We have a question from Christy.
So I'm probably going down a rabbit hole here, but I have questions about crowdfunding. I have talked to many people that are in a business sort of like what I'm going into, and they all were very anti-crowdfunding for legal reasons that I don't really quite understand, which is kind of like getting money from folks sometimes just on the premise of they want to invest in your company because they want to see whatever your company is in their neighborhood. And sometimes it seems like it's in for something in return. Like if you give me $100, you get, say, you're part of the mug club on Monday and you get a pint every Monday. If you invest $200, you get a pint and a koozie. Like, do you know what I mean? And so I just don't know that I completely understand how, if I did want to do crowdfunding, one, should I do crowdfunding or not? And two, if you were to do it, how does it fit into the financial plans in general?
Well, so have they told you why they don't like crowdfunding?
Well, two of them for sure told me, they just said that there were some legalities to it, that the lawyer just said you're better off not doing it. And so he didn't. And it had something to do with the way that maybe he wasn't doing it right, but when he was getting money from folks, it was almost like they were investors instead of just donating the money. Or were they donating the money for something in return, like a product? And so that's where I think this person might have messed up, but he made it sound like it was way more complicated than I thought it was.
Yeah, because you take the money and then you're gonna owe them.
Right. Are you taking the money because they want to just help you and they want to see, like, again, say your business in their neighborhood, if you have a business in Frontier, they're like, I want this, here's $100. Or are they giving you money for a return of some sort? So I just don't understand, maybe I just don't understand crowdfunding.
Well, we just had one of our companies do a round of Kickstarter successfully, did a Kickstarter campaign. It was pretty straightforward and they did it well, and now they're off and running to state, the next step. I really don't know, Christy. It's a really good question. I'd like to understand more, like this whole deal with memberships. The city of Erie now has a program called Kiva, Kiva, through Jennifer Hoffman. If you don't know her, I'm happy to get you introduced. And it is it's a really interesting lending investing model. It's a debt product essentially, where people can lend you a little bit of money and then you pay it back over time. It's pretty cool. So yeah, I really don't know the specifics of why a crowdfunding program, what legalities they're referring to. I don't know if Catherine or Jordan has any more detail.
But your attorney would. And so get an attorney, talk to the attorney about it. I know it's expensive, but if you're raising funds, unfortunately, there's going to be.
Yeah, I agree. I think that that's definitely a legal thing. I think what they're alluding to is that, like you said, that they're considered an investor, and there is something to be returned at a certain time frame. And so I would, just to make sure you have ironclad, legal agreements doing that. But I've heard great successes from crowdfunding. So I wouldn't, completely nix that as a source of funding for you, but I would definitely say speak with a business law attorney that is familiar with writing these type of agreements up. If you're not using, a platform to do so, to make sure that you're covered from all aspects.
Thank you.
Yeah, just real quickly, Christy, I can't remember if I shared this with you. Penn State through Ben Franklin provides the Entrepreneur Assistance Clinic. If I haven't gotten you connected with those folks, just send me an email. I'll be happy to do it. And they can provide all kinds of legal counseling for free on really almost anything. So that's for everybody. If anyone is interested in some legal guidance and legal counseling, I'm happy to share the Penn State Entrepreneur Assistance Clinic form. It's a very quick form you fill out and go from there.
I actually just met with them 2 days ago and set up my LLC, so.
Yay!
Awesome.
I will ask them next time I meet about that, so thank you.
Yeah, ask them. Great. I'm glad that worked out.
I think through the Beehive, there's Kathy can speak to this.
I was just gonna say that.
There is crowdfunding assistance through the Beehive. If I'm
Correct. Brad, would you like to talk about our Beehive product for free?
Yeah, I was kind of holding off on that because I didn't want to take away from the agenda, but we should talk afterwards about that. We do have a Beehive product.
We analyze different campaigns on Kickstarter and other platforms to show the person, are they successful, aren't they successful, kind of why, and to let you then be the judge on should you go, through with that, and then we can put you in touch with people in town that are trying to start that up, so. It's all free.
I'd love to know more about that. Brad, is it like the quick starter model?
Well, that's, so what we do is an assessment. We don't run the model because we sold the program to Erie Management Group. So what we do is we do an assessment of companies that have tried to fundraise on Kickstarter. So it'll give you some interesting insights and it's all free.
Awesome. What a great resource. Thank you.
Thank you for letting us plug it.
If a theme hasn't come through, use the network and the Beehive and everything else that's in this space. We're here to help. That's what we're passionate about.
And that's what's so nice, especially during Global Entrepreneurship Week, when we really all came together, and there are so many resources out there, but the nice thing about it is it's not hardcore competition where, you can't talk to so-and-so, you can't talk to so-and-so. It's everybody in the ecosystem and everybody, all of our panelists tonight, they just want everybody to succeed. And I think that's so great to have that type of an environment in Erie. Honestly. Any other questions all right, here comes our next hot seat question, and that is going to Jordan. Hot seat question. How do you value companies?
legally, we don't. We do
No?
not
Okay.
valuations on companies. We invest with convertible notes. So from that perspective, we do not place any valuations. Value, the talent, the treasure, and the time that funders are willing to put in, that's what we take into consideration.
Okay. Thank you. Brian?
And the idea. And obviously, the idea is all that matters.
Okay.
Yeah, valuation's an art, not a science. The more you need the money, the lower your valuation will be. The less you need the money, the higher your valuation will be. It's just weird. There are several like technical models for valuing companies. And again, too much detail to go in today, but essentially you're looking at the performance of the company, establishing some reasonable future opportunity or future value to their previous success, and saying, I'm willing to pay X for that. Other ways are, I want to buy 10% of your company. How much is that? You might look at revenue. You might look at a financial term called EBITDA. You might look at other various ways of doing that. And there's 30 different ways. Maggie Horn, actually, at the SBDC, right in your building,
Right.
is an accredited valuation expert, or she's got lots of experience in it. I'm not sure.
Correct.
She can probably give you a ton of resources and a ton of ways to do that.
Thank you. Catherine?
So yeah, back with Jordan, valuation for us is the story. That's the big thing for us is like, we want to know, of course, like Jordan said, the idea is definitely a great thing, but we want to know the story. How did you get here? How is this going to help? What is this going to do? How many employees is this going to employ? That's the big value that we want to do. How is this going to be a community asset? Those are the big things for us. So we are like really into, and that's what I said, we don't really put a lot into the business plan, but more into the story. Tell us the story of how did you get here? My grandfather's grandfather was a mason, and so I've learned how to do masonry, and I'm going to employ, this amount of people in the community, or we're going to be able to provide a grocery store in a food desert, and this is going to be able to provide food for, communities out of, that live in impoverished conditions and fresh fruit. That's the big thing for us, is that we value the story more than anything else, is that, there's a million great ideas, but we really want to see how I always say the good is what's going to happen in it. So.
Great, thank you. Any questions? All right, and if you noticed, I skipped a question, so we are going to go back to number 10. And this one is going to Brian first. And the question is for our startups here, how would they negotiate the highest pre-money value for their startup? What do they need? How would you go about it?
Yeah, good question, but perhaps a bit early for a discussion with startups.
Okay.
So keep in mind it's a good question, so let's talk about it. But each of our companies here are early, and so they're not yet ready, I don't believe, I could be wrong, for equity investment. That's what we're talking about. I'm going to give you a certain amount of money, and it's going to own a certain percentage of your company, creating a valuation. 99% of the folks that I deal with, well, 95%, are pre-revenue or very early revenue, and there's just not enough there. If it was based on valuation, we'd never invest. So we have to come up with another vehicle. Convertible notes is the most popular one, which avoids the entire valuation discussion completely. So we don't really valuation companies for that purpose, because we're dealing with very, very early stage companies. How you do that, or what is the question? How do I negotiate the highest money? Well, it's all about execution, right? Investors are only giving you money for exactly one reason. They want it back times 5 in 3 to 5 years. So what are you going to do with their money to multiply it by 5 and give it back to them in 3 to 5 years? Create that story. We're the team, we're the great team. We've got all the gaps filled. We've got a great market. We know the customers. We know what they want, product market fit. Look at the traction we've already got and what our plans are for more traction. It's all about the story and the momentum and the traction and the acceleration that your company is having. The more of that, the more you can create, more demand for you as a company to invest in.
Great, thank you. Catherine, same question.
Yeah, we don't. We are a debt financing, so we don't really look at to the valuation, like what Brian said. But the more of the story of what is that payment going to look like for us? What strategies are you going to do? What's going to happen with that? But we don't really look at valuations of businesses.
Thank you. Jordan.
As we're starting to have some of our portfolio companies go through this, it's have a really good historical story and then have a really good plan for the future. And that's the only way you can do this. Have a great story about what you've already done and tell it well, and have a great story for what the future looks like and tell it well. And that's the only way.
Awesome. I'm just writing. All right. All right, and any questions before we get to our last one? All right. Last question.
Just don't forget to ask.
Oh yeah, thank you.
It's a negotiation. Don't be afraid to ask.
Because what's the worst you can say? No, not right now, right?
And if they say no and walk away, they probably weren't really interested in the deal to begin with, and they weren't a good investor.
So going back to something I said a bit ago, good ideas, well executed, will always find money. Always. It's always true. So focus on being a great company, money will find you.
I like that. All right. Our last question. And we are at Catherine. What kind of startup makes you groan? And what kind makes you say, oh my gosh, I want to fund you today?
Good question. So startups that make me groan. I don't think there is a startup that makes me groan. So for me, it's not more about what you're doing, but kind of how you're doing it. So
Okay.
we're like I said, we're very big into the story, into the community, and what's going to be, what's going to be the return on investment if we do this, and how that's going to be exponentially going out into Erie and our surrounding counties. So for us, there isn't, we have our mainstay in industries, and I think that's just going to be typical for where we're at. We have a large healthcare industry, and some of those kind of supporting businesses that support our hospital systems. This is going to be a big thing. Our manufacturing and some of the things that we're doing in manufacturing, we're going to see those too, and those type of supporting business with those. So I don't see a business that kind of just is like, here we go again, another app. But I'm more focused into the person, the story, and to those. I think the frustration to me is when you don't sell yourself. That's the big thing. I want to know.
Okay.
I want the goods, the glamours, the horns, the pomp, the circumstance. Show me what you got. That's the big thing for me. When somebody comes in and just goes and says, we're looking for financing and we're, this and we've done that. That's not, that may not be the best fit for us. So I think that's the big thing for me, is that I look for the storytelling and how you present and communicate the needs of your business.
Thank you, Catherine. Jordan.
So the company that makes me groan is the one that didn't look at the program that they're applying to, or the investor that they're going after. If it's not in the vertical, if it's not in this focus space, don't apply for it. self-select out. And then the other side, the thing that makes me groan is buzzwords. Don't say machine learning if you don't have machine learning. Don't say AI if you don't have AI. Those are popular and it'll help you raise funds maybe, but not here.
Democratize.
And democratize. In
Don't
every
ever say democratize.
there is, if you look at a presentation and it makes you go, oh, yikes, don't do it. It's just put that lens of self-criticalness on yourself, and then move forward from there.
Great, Brian.
Yeah, I really align with what Catherine said. So Jordan, Catherine, several of us in the community, certainly myself, are so lucky that we have people who have thought about an idea for a day, a week, 5 years, whole life. And I'm the one you're coming to tell me that story? Oh my gosh, that's a privilege. I really welcome that. Even if it's ham-fisted, even if they're stumbling all over themselves, even if they're just through their excitement get lost in the story. It doesn't matter to me. Just knowing that someone is trusting us to listen to their story, maybe for the first time, other than their spouse or their whatever, it's a real privilege. So I don't ever get like, no one ever makes me groan. There are a few things that are a little irksome, which is not answering the question that I've just asked you. So remember, investors are mostly interested in your business, not your widget, right? So I don't care about the logo can spin and ML. It's a side story. Tell me about your business. How are you going to do what you do? How are you going to execute? What's your plan B? How are you going to succeed? That's what I'm really interested in. So I'll let you go on about how amazing this thing is that you've invented. But at some point, I want us to turn the corner and start talking about the money discussion. So again, it doesn't make me groan. It's just irksome. Let's get into the stuff that I can help you move forward with. So pay attention to that when you're talking to your investors. The kinds of companies that I love are just elegant storytellers. They tell, much like Catherine and Jordan have both said, they get why they're in this. They're all in it. They know where they're headed. Of course, they're going to be open to feedback. Coachability is super important, but they really have a sense of where they're going and they're professional about it. And they'll directly answer your question when you give that, give them a question. So again, no one really makes me groan, but there are some things that will grate on me after a while if we kind of don't move in a direction that really gets me to where I need to be so we can help you.
Fantastic, and you totally queued me up for what I remembered that I need to tell everybody, but before I say that, does anybody have any other questions? Oh my gosh, this was fantastic. I absolutely positively appreciate you guys taking time out to really talk to all of us, about funding and that world that we may not have, gone into yet and might be scary. I think it's great to know that you're there to listen and to offer advice and not just see everybody as the next dollar sign. I think that is extremely refreshing. There's something, Jordan shared his email, and I'll share everyone's email with you, but the great cue up to what all three just said about storytelling is next week is our final week, and guess what you are going to have to do? You're going to storytell. You are going to have an opportunity. Professor Kurt Hirsch is going to be here, and he is going to listen to your 1 to 2 minute elevator pitch and give you very nice, friendly, maybe some suggestions, feedback on your elevator pitch. So you have a little tab in your packet that I gave you on things to think about in doing your 1 to 2 minute elevator pitch, right? Because if you can't talk about it, and as the three said, if you can't sell it, who's going to want it, right? So the things, and this is what Hirsch does in his class. He talks about the 9 C's, to think about that when you are working on your pitch, and the P's of practice, 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 right? You want to know it like in the back of your hand, you don't want to have notes. I mean, I come in and I actually attend his class when they are doing the pitch. And if someone doesn't dress professionally, X. If someone is looking at notes, X, because they don't know it. They don't feel it and they don't believe it themselves. So they get the X. And they get the comment of, oh my gosh, I can't believe you did this. You want to practice. But everyone is coming. Next week, Letitia and Ken are coming. And we are going to do a little review. We are going to listen to your story. I mean, we are so anxious to hear it. I think it's fantastic. And then we're going to have a super special surprise at the end. And it is a surprise. So one thing that we do, our panelists, is we have everybody go up front. Letitia and Ken turn their cameras on, and then we take a group photo of tonight's session. So does anyone else have any final questions?
I have one.
I have a question.
Yes.
I'm sorry, I think I interrupted Brad. Go
No,
ahead.
no. You have a question. Go ahead, Brian.
So Sarah's gonna be tired of this and she already knows what's coming. Someone like to pitch us their elevator pitch. In other words, pitch a company, your company, like clickbait. Everyone knows what
What is that?
clickbait is, right?
I don't know what clickbait is.
What is that? Sounds like a swear word.
No. Clickbait is that, like, you're on Facebook and it says 9 ways to get rich overnight. And then, of course, you click because you want to know 9 ways to get rich overnight. That's called clickbait. So is there anyone ready to pitch their company like clickbait?
Not me.
I would, but I'm not sure my value proposition target is applicable to anyone here right now. It's about language translation, so I'm not sure that it really fits the mold here, but.
Oh, well, I'll give you one. Hold on for a second. Language translation, Jeremiah, it'd be something like, let me think. What did the prince of some country, what did the prince of some country say when he got out of his car? No, that's probably not very good, but something like that.
I'll try to work on something. But, I'll work on it. All right.
Pitching your company as clickbait. We have had so much fun in the Ben Franklin Tech Accelerator with that. And I'm starting to ask all of the companies that I'm talking with, pitch your company as clickbait. And people, there's some really good stuff. Anyway, something fun to play with.
That's funny.
Oh, you know how to do that.
All right, any other questions?
Witty.
Everybody knows their homework, right? This is an all skate, and we are all friends in here, right? I mean, it's a learning experience, and we shouldn't be embarrassed, but please practice, and we really look forward to the elevator pitches next week. And again, round of applause. I'd like to thank our panelists for coming tonight. And I have pinned all of our videos. I'm going to take the participants up. If everyone else can stand, go to your usual spots in front of the screen. We will take a picture.
Ask something.
That's right.
Okay.
And then remind me to stop recording. All right.
That's what I was thinking.
No.
Yeah, do we have to dress up next week, Kathy?
You know what? What did I say?
I know, I
What did
heard what you said, but I wasn't sure.
1, 2, 3, everybody smile. Letitia, you weren't smiling. No, you are. I'm just joking because you're not masked. 1, 2, 3. Awesome. It would be nice not to wear sweatshirts.
All right, I'll see
I
what
did have a shameless plug that I might throw in here. This is to Brian. Brian's not expecting this, but for the audience, an experience I had about 3-4 years ago, and Brian said this about 15 times, but I went to see him about my business idea, and I walked him through the concepts, and very kindly, he closed my laptop and said, do not show this to anybody. You need to secure it. And then if you want, I can walk you down the street to talk to somebody else, but do not show this to anybody. You just gave away everything on this PowerPoint. So from day one, Brian has supported me over the last 3-4 years in my business, and he really means what he said today. He walks you through, but he's very careful and kind and guiding along the way. So I think you've all met Brian by now in this room, most of you, if not all of you. So you're in good hands with everybody here, but the story with Brian is very true and has led me to some really good experiences along the way. So I thought I'd share that before today was out. Thank you, Brian.
Yep, and again, Ryan,
Thanks,
Jordan, and Catherine, thank you so much for your time. So appreciate it. And I will share all your emails with everybody.
Thanks, everyone.
Thank you.
Thank you.
Catherine,
Thank
always
you.
great to see you. You too,
Yes.
Jordan. Take care,
Alrighty.
everyone.
Bye.
Bye-bye, thank you.
To
So crowdfunding. So we have two different